Welcome back. You're watching Big Deal, and on the sidelines of the IVCS summit, I spoke to a whole host of investors. You heard Vishal Mahadevia being bullish on India, but being also uncertain about the deal environment currently, especially because of the changing macros as well as also the volatility that is taking place in the valuation front. Hear out some homegrown investors as well on their view on investments in India. We have with us Manish Kejriwal of Kedaara. So Manish, happy to speak to you. Always a pleasure to welcome you on CNBC TV18. Looking at the macro condition and the economic concerns that most of the people and the economists are raising, what is your view as an investor for this particular year, globally as well as for India?
Firstly, great to see you, Nisha. Great to be here. This is by surprise, but always good to see you at all times. I think, we'll do the two separately because I think the perspective is quite different. If you look at it globally, I think the biggest issue, in addition to obviously all the G2G troubles coming out of Russia, now the US-China issues, Europe being in a bit of a slump, the US economy really is what's keeping stuff alive. And there also you've had issues around the venture and the early stage and availability of capital. But the single biggest issue globally has been inflation. If you keep the G2G aside. And here I think it's quite different. In countries like India, we're already used to a 5 to 6% real inflation rate. Maybe it's 200 basis points more right now. We can live with it. Yes. Though we are seeing the impact of that, especially in our portfolio in rural India, and especially at the lower end of the pyramid. The bottom, not the bottom of the pyramid, but the lower half of the pyramid is where the inflation is really hurting. We've seen consumption, but I think that's temporary. Globally, inflation is a huge issue because countries used to zero, even negative rates of inflation like Japan to 3% to Europe or the US, now have an inflation rate almost 2x or sometimes 3x that amount. That leads to higher interest rates, lower availability of debt and credit, and hence deals in private equity are going to be much more challenged. So I think overall, India, a bit of an issue, but I think we'll get over it. Globally, inflation is a massive issue.
And what about the investor sentiment for this year in terms of investing, and also exit options have also squeezed because of the volatility in the equity market? So how will the private equity space really behave, expected to behave for this year?
Now we'll keep it to India only, right? Because globally this will be too complicated. Yes. So in India, I think the bane has always been exits, right? Yes. I think the good thing we've seen in the last 7 or 8 years for the industry as a whole, compared to a decade ago, the level of exits, the DPI across the board on average has increased tremendously. Yes. But the issue which is really hidden behind, Nisha, is it's bimodal. Yes. Some funds have shown DPIs of 300 to 400% on a fund. Others are at 0 or even single digits. So I think what's going to happen, and we're already seeing this at least in the late stage private equity side, is capital is going to the winners. Yes. The winners and the non-winners are being separated. It's bimodal. Yes. And there'll be no dearth or no shortage of capital for the funds which have a high performance, shown great DPI, on fund 2, 3 or 4, and most importantly, who've institutionalized their firms. Right. It doesn't matter. And these teams are now not relevant or reliant on any 1 or 2 people. Yes. These firms will run forever. Yes. The other firms, at least in the PE space, will be more challenged who haven't shown returns. Yes. The VC space is very different. Yes. I think there are clearly 4 or 5 very strong performers. But I think the jury's still out there. And will there be, like in PE, there are 2 or 4 names. Yeah. In VC, there are 4 or 5 clear winners, but there could be 10 or 15.
Now, how do you see the timeline for which this particular phase is going to be a difficult phase for the tech digital world?
I actually think the corollary is true. If I look at what's attractive about India, the tech stack is phenomenal, right? I mean, that's created the base, and what the government has done on that front is truly miraculous, right? It started off with a whole bunch of the different initiatives that we all know about. If I look at the last 2 years, we actually almost deployed nothing in 2021 because we were irrelevant. There was capital available aplenty.
Yes.
You had many of the global guys coming in without using any names, we all know who they are,
Yes.
who deployed capital at crazy valuations.
Yes.
Suddenly in the middle of 2022,
Yes.
or maybe around April, May,
Yes.
when there was a crash globally and India also felt that and people started pulling money out, is when we became relevant again.
Yes.
So many PE firms, ourselves included, not surprisingly, had a very benign 21, early 22,
Yes.
and we've done a series of deals in 22, only because
Yeah.
our perspective on valuation hasn't changed like the mood or the weather. We've remained consistent.
Yes.
The numbers we offered for the same company in 21, which we were thrown away for, we were welcomed back with open arms. So I think
Right.
that's the big change. We haven't changed our mode at all, but the context has changed,
Right.
where we feel a lot more relevant, especially when you come with not just capital, but lots of other skill sets, whether it's operating partners, you add value in a company becoming an IPO. I think even the entrepreneurs in India, who I think have been the most important reason why we all come back and lived in India. It's exciting. It's not a job. You're enjoying every moment of this,
Yes.
of living, right?
Yes.
But even they have matured over the times.
Yes.
They're seeing the difference like LPs are between those GPs who add value,
Right.
those GPs who are just there for a free ride.
But valuations are very, very important right now, and they have been volatile, Manish. How do you see this particular year in terms of volatility in valuations, and especially in the digital space, which is something that all the private equity players look at very keenly? Is it going to go through a major crash and cash and burn, so to say, and then there'll be a few casualties as well? How do you see the picture for this year?
Sunisha, if I could truly predict the future, I wouldn't be here. We would be playing on those slot machines. But all jokes aside, it's tough. I think it's going to be a challenging year. I think what companies got used to in terms of a burn rate, it almost reminded you of 2001 or 2000, right? The eyeball culture had come back to a certain extent. I think now people are looking at fundamentals, unit economics, what is the real TAM,
And asking what's the bottom line, which should be
and
the
when-
first question anyway,
exactly. And
right?
but if the bottom line, in my mind, can be delayed, but it needs to be there eventually, right?
Yes.
And I would say we ourselves at mostly smokestack industries, we started looking at the consumer tech space, done very few investments, but there were a couple of team members who really believed in this and convinced the rest of the organization we should look at it.
Right.
So I think so we do tech and non-tech, consumer tech, we do financial services, et cetera. But in tech especially, what we have been spoiled with the large global players is corrected to a certain extent. It might change again. But I think the discipline has now come in where for at least guys like us, this is a much better environment to deploy capital behind. But the resultant will be, again, a bit like what I was saying about GPs. There'll be winners and losers. So in every vertical, let's say there will be market leaders who will consolidate their position, have no issue raising capital, whereas the others who were burning money, who did not have a viable plan in the first place, will go away and shut down.
All right, your sectors of choice for this year.
I, as you know, since my days in Temasek, love financial services. For me, and that's what I said on the panel, to me, financial services is a proxy for the country's growth, right? So to me, we're focusing on that, of course, but not just lending businesses, but also insurance, also asset management. We also like tech and technology services. We have guys like Pramod Bhasin working with us. We've done a couple of deals in that space. We've also done a couple of recent things in the healthcare, healthcare services side. And lastly, the whole consumer tech space, where historically and even currently we've always been nervous on valuations. But I think what happens is, even in those situations, I hope we never overpay. But the beauty on India is, even if it's no matter what the deal is, the underlying thesis is growth. So even if you slightly overpay, I'm not saying we want to go down there, then you can make it up. Maybe you hold the investment 1 year longer. You'll have the same MOI, maybe a slightly lower IRR if you've paid too much. But the underlying growth remains, right? In my mind, the crazy valuations, that's history.
All right, so those were the investment views coming in. There are macroeconomic concerns and changing valuations, and very dynamics are really changing. It is likely to be a little difficult year for deal making, and also the deal flow slowdown is looking evident at the moment. With that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in.